So let's get our delegates to join. See the numbers increasing. Very good. Let's give them a bit of time for joining us. We had a record number of registrations for this session, no doubt. Getting to more than 50. Very good. Let's give people a few more seconds to join, and then we'll get started. Good. I think we are ready to go. And I see more people joining, so I think that will continue for a few minutes. So welcome to all of you to this sponsored ITFA webinar, sponsored by Eastnets, on the use of technology to combat trade-based financial crime. This session is very timely, as we have just launched our financial crime compliance initiative in September, as we thought compliance, trade-based financial crime topics remain #1 priorities for lenders of any size, banks and non-bank lenders, and also more and more for institutional investors getting into trade finance, trade funds and others. So this is why, indeed, as part of the ITFA itself, and in particular the FinTech committee I'm chairing, with members, we launched the Financial Crime Compliance Initiative. And this Eastnets sponsored webinar is in particularly well-timed because we want to expand the number of educational opportunities for our membership to learn about trade-based financial crime. Of course, personally, I'm not specialized in this area, which is why I will limit myself to being a moderator for you today as part of my ITFA board role and head of the FinTech committee, as you know. However, we'll have two experts in these fields with us today. Sean Smith-Taylor, Group Product Director at Eastnets, and Ben Arbour, CEO of Complete Data and co-chair of the Financial Crime Compliance Initiative, Sean being also involved in that initiative. So welcome to both of you, Sean and Ben. Delighted to have you on this session. And of course, we have a full hour to gain insights from your expertise in this area. And we have prepared the following agenda for our audience, and also invite our audience to engage through the Q&A chat so that we can address any particular question during the session. So don't hesitate to submit your questions via the Zoom Q&A chat. So we'll first have a look at the trade-based financial crime topic and issues as a threat to the business. And for those of you expert in compliance around payments, of course, trade-based financial crime is far more complex than payments-related compliance and financial crime. So we look at those specific complexities. Sean will go through the main dimensions representing this threat. And so we get a better understanding of trade-based financial crime. And then we'll engage in discussion with Ben and Sean on how technology can address those threats and risks and deliver solutions. So first, I'd like to welcome Sean. Introduce yourself, please, and then tell us more about how you see this threat of trade-based financial crime.
Sure. Thank you, Andre. So also, Eastnets is very proud to be a member of the initiative, the FinTech initiative that you suggested, and we're a very active member of the ITFA generally. So very happy to be on here discussing it. So as Andre said, I'm Sean Smith-Taylor. I'm the Group Product Director at Eastnets. Eastnets is more on the vendor side, so we specialize in supplying financial crime, payment technology to banks and fintechs. And I think what's really relevant to the call today and the work that the ITFA do is we've had a very exciting product launch this year for a product called SafeTrade, which really looks at how to build a holistic view of financial crime risk across payments and trade. And I'll be giving a couple of kind of learnings, a couple of examples that we've seen in our journey in the lovely trade finance world. But as Andre said, I think it's really important to be able to set the scene. So, what is the threat of trade-based financial crime today? As this slide will tell you, it's very large. So 1.6 trillion of money is siphoned through the economy on an annual basis. Now, this 1.6 trillion is from a 32 trillion figure that flows through global trade. So the 32 trillion US dollar figure is very large. The percentage actually that is siphoned through from legitimate funds is a really high percentage. So to put that into context, 1.6 trillion is actually the size of Australia's GDP. So a large country like Australia, that gives you the global significance. Interestingly, regulators receive lots of cases or suspicious activity that's filed on an annual basis. The colleagues that have joined, or the attendees that have joined who work in banks, will no doubt have some stories to tell about the cases that they've raised to regulators in the past. I think the interesting thing is actually 9 in 10, so 90% of all large-scale money laundering cases have an element of trade within them. So it's actually a large percentage of the ones that you'll see on the news, or the ones that are actually shared by media outlets, will have a trade finance element to it. So it's a large percentage of the ones that are ultimately causing a lot of damage to the economy. But that being said, there are a lot of reports that are actually filed by financial institutions annually. So there's 1.15 million reports that are filed in relation to money laundering. I think the challenge that we have today, and we'll discuss this challenge later on in a bit more detail, is of that 1.15 million reports that are ultimately lodged to the regulators, it's a really small percentage that really focuses on the trade finance threat. So it's only 0.02% of those reports are really focused on the trade finance risk. So we think it's underreported, and we think that actually technology can play a very vital role in ensuring that the information and the risk associated with certain transactions is classified appropriately. So that's kind of high level setting the scene. If we move on to more of understanding trade-based financial crime, there'll be people on this call that have really in-depth knowledge of trade finance, and maybe from a technical, maybe from an operation, maybe from a sales side. But I think what's really interesting is what we're seeing in our engagements with law enforcement, with regulators, with customers, is there's some really key typologies of risk. And I'll cover a couple on this slide. Ben's going to add a few also from his experience. But we thought it was useful just to kind of show actually kind of an understanding of what the typologies are today. And interestingly, a lot of the regulators, and say FATF, for example, isn't a regulator, but they've come out with guidelines consistent with Wolfsburg's guidelines, which cover some of these typologies. So one of the main ones is over or under pricing. So the key to this is if goods have a specific price, let's say $1,000 for a MacBook, there's a typology where actually through a trade deal, a MacBook may be priced at $50,000 rather than $1,000, which gives a huge advantage the parties involved in that transaction to send more potentially illicit money through the payment rails. And again, unless you have the right types of technologies that can understand what fair value price or fair market price is, that's a real big challenge today, and it's predominantly a manual process. Multiple invoicing, as the name suggests, why only have one invoice or use one invoice for a single purpose? So we see lots of examples where the same invoice or very, very similar invoices are used on multiple occasions. So again, that allows actually the value for illicit funds to be multiplied through the use of a very same instrument. Short and over shipping. This is one that always it always requires a lot of attention. So if a trade is actually looking to, I'll keep the example of MacBooks again, because everybody loves computers, maybe not Apple, but let's go with MacBooks anyway. So if the documentation on a trade says that there's 200 MacBooks in this container on a ship, well, actually there may only be 5, or actually there might be 5,000. So I think having the data, and we'll talk about siloed data a lot, I think during this webinar, but having the data from the right sources will actually allow you to understand whether there is short or over shipping involved in a transaction. You won't necessarily know this from just looking at PDF. I think that's one of the key things. Deliberate obfuscation of type of goods. So a really good example is dual use goods. So if you think of a commercial application for a drone, it's fairly clear. So drones, for example, I'm based in the UK. Drones are used for when people do surveys of if they want to buy a house. So now you don't have to just have somebody physically, a surveyor that goes into a house. You can actually have them looking at the roof from like 30 meters high with a drone providing beautiful coverage, right? So that's a commercial use. There's also a non-commercial use. So again, having clarity within the trade transaction is really, really important to ensure that the dual use good risks is minimized. Phantom shipping, which is also called ghost shipping, which again always makes me smile, but it is a real risk and it's serious. So the explanation of this is the trade documentation will be there. Everything will look absolutely fine. You will have a bill of lading. Everything will be as you would expect it to be for a trade, but actually nothing was shipped at all, right? No goods were actually transferred, but the documentation, the transaction will allow you to believe that it is. So again, it's really important. We'll talk about vessel tracking. We'll talk about the data that comes with vessel tracking later. It's really important you can actually understand, A, has the shipment been made, but then also what was it within the container that was ultimately shipped. So again, it's bringing all of this data and making sure it's not siloed. Carousel transactions are all around a specific type of fraud, which is more kind of VAT fraud. So that's really around where there's multiple parties involved. I may be based in Poland as a seller. The buyer may be based in Germany. So actually, there's no tax because we're both in the EU. Whereas actually, then if that transaction is then sold, or that goods is then sold to somebody else in, let's say, Germany as well, so the same country, then national tax needs to be paid, but actually won't be paid by the first party. So it's a way of actually getting around things like VAT or tax, and it's quite a big component and very, very difficult to track. Actually, it's not until after the event that you normally find out that ultimately it's happened. So it's very difficult to find out. I'm going to hand over to Ben, actually. Ben, do you want to go through some of the typologies that you see from your side?
Yeah, thanks, John. That was fantastic. Really appreciate the overview, and I'll play off a couple of those themes with a few introductory comments. Andre, thanks for the introduction. Ben Arbour, I'm the CEO of Compledata. Been with Compledata for nearly 3 years. We're a Europe-based fintech focused on the use of AI and generative AI in payments and trade finance for process automation and fin crime risk reduction. Prior to that, I was HSBC for 24 years, mostly in trade finance, including spending 4 years in compliance. So sort of managed financial crime risk, both from the first line of defense and the second line of defense. I think 3 kind of scene setting areas or comments to sort of help kick off today's webinar. One, around detection of financial crime in TBFC, 2, the difference between a predicate crime and money laundering, and then 3, typologies. And Sean, I think you've done a great job of covering many typologies. I'll fill in a couple of blanks. So I think from a detection perspective, obviously prevention and detection are kind of the 2 big themes in managing financial crime risk in the trade space. Trade-based financial crime is not trade finance-based financial crime. A buyer and a supplier making a payment, buyer to supplier, obviously can be trade-based financial crime, and it's more difficult to detect where there's just a payment and not, let's say, a set of documents under a letter of credit, or a documentary collection, or a standby, a guarantee, or even open account, where you may have either receivables finance or supply chain finance, an invoice or a set of invoices listed on a Excel spreadsheet or a CSV file. So I think it's important to kind of recognize that the TBFC happens probably more broadly and deeply in the payment space, where there's a buyer-supplier relationship, and is easier to detect in the trade finance and supply chain finance space, even though, as Andre said in his introduction, it may be more complex because of the amount of data and siloed data that's available. I think also it's worth mentioning that money laundering is a predicate crime to the underlying actual crime, which is a myriad of possibilities. So whether it's extortion or organized crime or narcotics-related crime or sexual exploitation, indentured servitude, human slavery, human trafficking, illegal wildlife trafficking, there's a vast amount of illegal activities that lead to the need to get funds into the financial system, which is placement, layering, and extraction through many of these techniques that Sean has already mentioned, as well as U-turn transactions, suppliers paying buyers instead of buyers paying suppliers, and many more money laundering specific typologies. Interesting to note that, let's say terrorist financing, which often comes under money laundering, is the opposite. Terrorist financing is money coming out of the system rather than going into the system to illicit parties for the finance of terrorism. I think final point, the kind of broader typology set, the industry tends to think about trade-based financial crime in 5 kind of key buckets. Money laundering, we've spent quite a bit of time on. Sanctions evasion, tax evasion, fraud, and bribery and corruption. Export controls and evasion of export controls is a kind of big growing challenge for all of us in the industry. And I think that tends to fall under sanctions evasion, as does dual use goods. In theory, both of them could be their own separate typology with their own set of policies and expertise within financial institutions to manage that risk. But any one of those 5 kind of key large typology sets has a significant level of complexity, depth, and breadth to it. And certainly we can dig into many of those in more detail. Sean, you've already mentioned dual use goods. You mentioned vessel, maritime risk in and of itself is a huge focus area. And then even things like, customs evasion with duplicate, commercial invoice versus customs invoice, or pro formas, or concealing the origin of goods, ship-to-ship transfers, etc. There's a lot of detail that we can get into today and try and cover, but I think it's point being the level of breadth and depth and complexity in trade-based financial crime typologies is tough to manage for any specialist, let alone folks who are trying to manage this as a non-specialist.
Great, thanks, Ben. I think that's really useful. So the last area before we get to my more open discussion is around what the persistent threat is. So Eastnets in September launched a report that we did with Finextra, which is really looking at the TBFC landscape, what the typologies, what the trends were. And there was 3 things that, there weren't just 3 items that came out of this report, but 3 of the key ones that we really want to highlight. I've mentioned it before. So I talked about data silos. So, different departments not having visibility. or a department not having visibility of data that would be useful. This is backed up by 52% of the financial institutions that took part in our survey, which ultimately became a report, cites the data silos as a major obstacle. So, and again, this isn't just work that we've done with Finextra. Data silos is an area that's highlighted by regulators and also in the guidelines that I mentioned earlier. So again, it's a big issue, and both myself and Ben, for obvious reasons, will be talking and sharing examples of how technology can kind of help get around this as a threat. Another one is the number of alerts that the investigators have to deal with. So 95% of the alerts for TBFC are false positives. So what can then happen actually, and this is the same also with sanction screening AML, is you can actually employ different techniques using more advanced technology to allow yourself to automate certain alerts, actually remove those alerts from happening in the first place if you want to really go towards advanced technology, or alternatively just add additional data sources in that allow a more accurate and more timely decision to be made. So the 95% is a concern because of the amount of resource ultimately that's needed. And I think TBFC is an area that, if you go back, say, 10 years ago, yes, everything was super manual, but also there weren't really specialist systems that were being used. So it was very much, somebody would have taken a normal sanction screening system or an AML system and almost kind of changed it slightly and amended slight risk typologies to use it against trade risk, whereas that's wholly inappropriate when you're talking about the scale of money that's going through. So I think the number of alerts is an area that should be a concern. It is a concern, and I think during the next 20-30 minutes we'll go through how again technology can help, and there'll be some traditional areas that can help. So rules-based architecture is good for certain things, so that can help you, but then there's more advanced technology, whether it's getting the data through LLMs, whether it's actually using different types of machine learning to optimize the alert structure. So there's lots of good things that can happen there, but today, from what we've seen, there's still a prevalence to more of the outdated tools where 95% FP rate is something that's seen. And then there's good news and bad news. So the good news is 87% of people that were surveyed recognize that advanced technologies, so AI, machine learning, has value. So that's a huge tick, I think, for somebody that works in the field that me and Ben do. I think the challenge is, I think, the speed and maybe the education and the comfort to ultimately embracing and integrating these fully. So I would imagine everybody or most people on this webinar have used ChatGPT. I'd be very surprised if people haven't, even if it's a public version you have on your phone at home. So I think it's becoming more widespread. I think it's now how do we as an association, the ITFA, how do we highlight the successes, acknowledge the challenges, and really increase adoption. So I think it's really good news that the awareness of advanced technology is there with the 87%. I think there's definitely work to be done in terms of getting specifically large banks comfortable. Every large bank will have innovation projects that have elements of how can AI streamline your internal processes, but I think how that can be used in a financial crime area and specifically a TBFC area, because I think we are behind in terms of the controls that are implemented. I think that can be a nice area of focus for value. So that's, if you don't like PowerPoint presentations, the good news is that's it. You're not going to have any more slides. The good news also is you're going to get more interactive discussions. So I'm going to hand over to Andre, who's going to help facilitate the rest of the agenda, which will be more of a discussion with myself and Ben.
Yes, thank you, Sean and Ben, for outlining and introducing the complexity, I would say, of trade-based, not trade finance-based, indeed, trade-based financial crime. One question, and I'll be the first to raise a question, and I invite our audience, of course, to submit their own questions via the Q&A. what are the regulators really forcing the banks to, how far are the regulators forcing the banks to tackle this threat? Because indeed there are many risks that would not necessarily impact the banks unless they get fined for not having spotted and blocked some transactions. So how are the regulators basically covering and recognizing the importance of this threat and actually indeed forcing the banks to deal with this? Maybe for Ben first.
Yeah, sure. Happy to give a view. I think I mean I interact with the regulatory community in multiple regions, and I feel there's a level of awareness of the threat from a trade-based financial crime perspective, as well as movement to react to emerging threats, and a fundamental underlying commitment to a risk-based approach. So I think, Roger, when you say what the regulators are doing to force the banks to comply, is very much a, guidance approach, not looking to, screen every transaction for every potential risk on a proactive basis, more to understand how financial crime risk frameworks within banks are able to detect and prevent potential financial crime risk without creating unnecessary processes, vast amounts of false positives at a transaction level, making sure that at a customer level and at a transaction level there's the appropriate balance. But it's certainly a fast-moving environment. I think sanctions risk detection is a difficult one, with the increasing complexity post Russian invasion of Ukraine, together with the geopolitical concerns from a global perspective, where complex corporate structures and identification of ultimate beneficial owners is difficult. I'd like to speak more about counterparty risk identification in trade finance later, which I think is an interesting area where there's some advances to be able to deal with that risk. I also think we're seeing regulators supporting and embracing new technologies increasingly. It's great to see the level of collaboration in the US, for example, across multiple different bank regulators, law enforcement, and government agencies around innovation and the use of data. Obviously, the Anti-Money Laundering Act of 2020 encouraged sharing of data and use of technology. Still feels like relatively early days in terms of the adoption, but also in Europe, for example, the use of AI when examining banks has been increasingly evident for 2-3 years. So we're starting to see the regulatory community from a trade finance and trade-based financial crime perspective encouraging and embracing technology more, which I think is very encouraging. You agree, Sean? Are you seeing those sorts of trends in the regulatory space?
Yeah, I think that was really interesting. I think there's probably two areas that I would kind of follow on from. I think we've seen different regulators move at different paces, which is very normal. That happens, and that's not anything to do with this topic we're talking about. It happens within screening. It happens within traditional AML as well. So I think the good thing is that FATF, Wolfsburg have been pretty clear on the typologies in the guidance that they've given. So that's a good thing. So therefore the regulators have a good steer as to what are the what does FATF or Wolfsburg want us to focus on. So I think that's quite clear. I think there's been different speeds about how then in national regulators have ultimately taken that guidance and implemented it within their own wider financial crime strategy. I think there's also there's good examples. So Singapore and Hong Kong, for example, have been very, very specific. They've got national, also almost national legislation that supports the principles. In the UK, the FCA came out with a Dear CEO letter to all of the banks, I think maybe 3-4 years ago, that says there was systemic risk within these controls, or the lack of, I guess. So I think certain regulators are a lot tighter on it, which isn't terribly unusual. I would like to see more of a consistent approach, because we're talking about global trade, so this isn't a a risk that really just is isolated to a specific country or a group of countries, right? So this is global trade. We talked about the sheer volume of it earlier, right? So it's 32 trillion. So I think there's probably more work that can be done at almost a large regional or global level. I think maybe there needs to be more specificity from FATF. Maybe they need to review, and I know they are currently in the process of doing that, but maybe they need to review their guidance, be a bit more specific around the use of technology and the advanced technology. I think the other thing that I'd focus on is what you said, Ben. You talked about data sharing. So I think that has to be a focus area. So I think we've seen real success actually data sharing in, let's say, traditional sanctions or counter-terrorist financing. I think that's been amazing. I think that the fact that what we're referring to as TBFC is underreported, and I think it has to be on the basis it only represents 0.2% of filed cases. That tells me anyway, and I've worked in either reporting cases or building technology that helps report the cases for 20 years. So I think from that perspective, it tells me that there's something wrong, and it's either that, well, not wrong, something that can be improved. So it's either the data is not shared, so therefore you can't connect the dots, or alternatively the data is shared, or it's shared in a way that actually the technology can't connect the dots for you. So the process, either the fundamental data sharing mechanism is broken, and I'm not sure it is because there's loads of work that's been done, but maybe that needs to be embraced more, or ultimately the tools that are used to share this data are broken. And I think that needs to be the focus, because for me it's terrifying, right? So 0.02% represents trillions and trillions of dollars. That doesn't make any sense, right, in terms of the reported cases. So I think data sharing has to be a focus, and I think more prescriptive guidance from global bodies such as FATF, but then also national regulators. We have to get stronger. Otherwise, you're going to continue seeing. I was talking to somebody the other day, and this isn't directly relating to trade finance, but they said, "Hey, have you seen fraud GPT?" And I was like, "Sorry, what do you mean?" And they were saying, "Well, actually, a group of criminals have effectively built a ChatGPT version, just basically sharing and telling you how to commit fraud really easily." So I guess my point on that, and it's a side note, is more that actually, however advanced we think we are from a financial institution, a regulator, or a vendor perspective, there are groups of criminals that are already using advanced LLMs today.
Yep.
So therefore, if you want to detect them, you want to get ahead of them actually being materializing in risk in the economy, then you've got to start actively investing in this technology.
Yep.
Yeah,
Okay,
thank you. Sharing is an interesting one, as you mentioned, Sean. I agree. It's critical, and I agree that there's a level of reluctance from a financial institution perspective to go further. Obviously, as you mentioned, there's some good examples, like I guess Gimlet in the UK, a similar organization in the US, but it tends to be the investigation level where there's a high level of confidence that there's no concern from a regulatory perspective. Actually, the technology exists to be able to compare, I don't know, grey lists, for example, without any level of risk that another institution will see the first institution's additions to a grey list in terms of potential concerns around sanctions nexus or money laundering or other financial crime from a counterparty perspective. But those technologies aren't yet widely adopted because of the, I think, concern generally in the compliance community. Just one other point on the broader question from a regulatory perspective, Andre. I agree, Sean, with the multilaterals approach, not necessarily needing to be more prescriptive, but certainly a kind of level of guidance that can increase in velocity. I think it's also the kind of broader set of stakeholders from a anti-money laundering perspective, where we are seeing some encouraging developments on the fundamental underlying challenges which help financial institutions prevent and detect this stuff. Like, for example, manual processes and the use of paper, right? We've all seen the Electronic Trade Documents Act in the UK, or UCC5 in the US promoting electronic signatures. I love the ICC work to get to key trade documents and data elements, and technology now to extract data from PDFs. So some of those things which have held back the ability to prevent and detect downstream are now kind of being solved by legislators, governments, and multilateral bodies, as well as regulators. So I think that's important to state as well, in terms of the ability then to, as we get to a more digital world, leverage that data to detect and prevent financial crime.
Yeah, definitely. The new technologies are being embraced by the policymakers, and hopefully more and more indeed AI and ML by regulators as well. But let's dig deeper into that area of how technology can help. Now we have an excellent context around the threat and the complexities of TBML or TBFC, sorry. So tell us about how your technologies, or and as well as third-party technologies, can help address many of those risks.
You want to go first, Sean?
Yeah, happy to. I think it's really interesting to, I guess, recognize, whilst answering that question, how complex a trade transaction is. So you're going to have multiple different parties, different countries. You need to understand the type of goods, i.e. the product or the service that's being traded. You need to understand the channel it's being traded, how it's being transported. You need to be able to, as Ben said, look at, review the documentation and really understand what the risk is. So it's really, really complex. It can take months. This isn't like a SEPA transaction, right? So this can take absolutely months, weeks and months for a trade deal to be finalized. So I think with that in mind, I think one of the key areas is being able to provide holistic view of the risk. So even if you look at three different areas, so if you look at the sanctions risk from a vessel tracking perspective, if you look at the document utilization, and then if you look at the risk typologies. So there are three, and I'm simplifying this massively, three key areas that will help you control the risk or understand the risk of a trade deal. Where technology can help is it can bring all of that information into a single place. So what we've done within SafeTrade is actually bring all of these different data sources that were siloed previously. So again, if you look at some institutions today, you will have a team that looks after the sanctions risk, and they will review and make sure there's no sanctioned entities that are transacting, right? And they'll ensure that they'll be getting data feeds by maybe external providers to look at the vessel tracking data, and they'll make sure that actually those goods aren't going through specific ports or visiting countries that institution isn't comfortable dealing with. So that'll be in one area. The document utilization will be done in another area. So rather than actually looking at all of the documents manually, PDF, searching, doing everything manually, you can, as Ben will definitely tell you in a lot more detail, you can get technology that helps you read those documents and put it in a form that a computer can read. And then you've got the compliance risk. So the typologies we were talking about earlier. So again, these are siloed today in lots of organizations. In the research that we conducted, it stated that there was about 4.5 departments within an organization that would look at a trade deal. And that's just an average. It could be more, it could be less. But I think the point is, today, things are siloed. What we've really focused on with our SafeTrade product is actually bringing everything into a single platform. So actually, if you want to look at the sanctions risk, if you want to look at where the goods have ultimately been transported from and to where it is exactly at this point today, if you want to look at delta screening, so screening the entities at the point of the deal conception is great, but actually how do you know that those entities haven't gone rogue or bad in the 5-6 months the trade transaction has continued? And then just making sure that actually we talk about advanced technologies. That's the point of this webinar. And people talk about Gen AI. I spoke slightly flippantly about ChatGPT earlier, but one of the really cool things we're doing is for the risk typology of over or under pricing, we're utilizing Gen AI. So in my example of a MacBook, if in the trade deal it says that actually the MacBook is going to cost $50,000 per MacBook, I mean, that's going to be a pretty powerful MacBook, right? It's probably it needs to have some pretty good features for you to pay $50,000. But actually, if you know the fair market value of a MacBook automatically using Gen AI is $1,000, $1,500, whatever it is, it's really easy to flag these things in real time. So rather than having to go through a really in-depth review that takes a long time, there's of course manual errors because that happens within any manual process, not just this area. So I think that's a really, really key area that we're very, very proud of what we've done so far within the over and under pricing. It's really well received by our customers, I think. But there's so many applications of advanced AI within this area, and I think we're just scratching the surface. So I think all I would say is my major message is we know it's really complex. We know there's data silos. So I think that's the first thing. If you can get the data in the right place, you then have the opportunity to implement advanced technologies that can really add value. If you implement the advanced technologies in silos, the value is going to be super, super limited. So I think getting the data into a single platform is the first thing. Then looking at the advanced technologies that you can implement to mitigate against the typologies of risk that are there today. But then also, as I said, criminals are already using Gen AI. So how do we ensure that we're not only looking at preventative controls, but we can almost get ahead, right, of where the markets go?
So once you have the data in a single platform, Ben, how can you add value on top of this processing of the data?
Yeah, thanks. I think it's interesting to me to look at, as Sean alluded to, specific use cases rather than trying to, go the silver bullet approach. I think genuinely the data challenge is starting to resolve itself. The old adage that garbage in, garbage out means you're not going to have an effective process is starting to be less relevant. It's early days, but you don't necessarily need to have a big data cleansing project or data transformation project to be able to do a few smart things with technology. I also think it's worth stating that AI has been around for several decades. Gen AI, of which LLMs are a component, is obviously much newer, but there's plenty of AI techniques, including natural language processing and machine learning and underlying data science work, which is effective and efficient in the TBFC space. I think maybe, if I can, 3 or 4 use cases which may be sort of interesting and useful. We've touched twice on being able to extract and manage specific data fields. I think optical character recognition on PDFs of documents is over-promised and under-delivered for at least 20 years. I think now, genuinely, with the advent of LLM, there's a sea change in being able to, let's say, identify automatically and extract long, vague goods descriptions, which then makes it a lot more powerful, fuzzy matching logic or otherwise, to detect potential, let's say, dual use goods activity. I think likewise, being able to recognize, detailed instructions on Swift messages in an automated way, as well as names and addresses of counterparties, means that the kind of downstream application of NLP, for example, in entity recognition, no entity resolution, but is a counterparty who they say they are, on a score from 0 to 100, makes it a lot more effective to counter sanctions evasion risk. I think there's some amazing companies out there in the fintech space doing threat detection just off Swift message contents. So I think those sort of technologies of basic getting information out of PDFs has really helped empower downstream use cases. I think from a counterparty risk or perspective, machine learning models have been able to really go a step beyond where we've been for many years in the industry, which is at the transaction level, who is your customer dealing with from a buyer, supplier, assignee, consignee perspective, to actually not take a huge amount of external data to come to a risk score on that counterparty, including, is it a potential shell company? Does it potentially have, ownership in offshore tax haven? Is it potentially a sanctions nexus from a UBO perspective? And I think you can add in open source intelligence and directory check information as well to go a step further. But even a relatively basic machine learning model has really advanced counterparty risk scoring. You can add in legal entity identifiers and other information which is much more common and available now to even enhance that. So I think that's an exciting application, not of Gen AI or something which may seem untested or difficult from an internal approval perspective, but something which has been around for many years. And I think we're starting to kind of take some of these use cases and really push the boundaries. I'm quite excited about adverse media, which sounds controversial because many banks have seen many regulators say, where there's a potential money laundering red flag, do an adverse media check, which is relatively manual at the escalation level, usually done by compliance, slows down the transaction, usually doesn't find anything perspective. But I think now with some of the new technologies, adverse media screens are super targeted based on the most amazing level of data analysis and parameterization, which means actually if you can put that into the transaction level without blowing up the number of false positives, can really improve effectiveness and detection. Again, still relatively early days, but I think that's something which is exciting. Final point, very specific to what you mentioned, Sean. I think it's interesting to see the debate from a use of AI perspective in detecting money laundering activity in trade finance specifically, where I do think trade finance can learn from payments who've gone down the scenario route, obviously rules based, with the downsides that we've mentioned, but compared to trade, which was largely manual or post-transaction, now there's the ability to do much more at a transaction level, right? Obviously, maybe import LC issuance, followed by presentment of documents, followed by payment, etc., right? So multiple stages to a transaction. But back to your first question, Andre, my suspicion is that most regulators, if they say you can detect earlier rather than once a month in a kind of post-transaction scenario, and therefore not necessarily block a transaction, but escalated earlier, SAR it earlier, I think there would be a lot of receptiveness to that in the regulatory community. And it's still relatively early days there in terms of being able to use AI at a almost real-time level. Obviously, Safe Trade is an example of that, and there's some other good use cases out there. But I think that's an interesting, it's one of the cases where these kind of old challenges in our industry that have always been kind of manual and difficult are now starting to be solved by technology.
Good, thank you. We have lots of questions in the chat, so I'll pick one of the last ones on dual use goods. And how can the bank staff, someone is asking, identify such dual use goods risks? And indeed, you require, I guess, context on who is using a drone. Is it for war or is it for industrial activities or civilian activities? So how can you get the context to take the right, to conclude the right risk level? Maybe Sean.
Yeah, sure. I mean, I mentioned this earlier, right? So I suppose this was going to come my way. So I think there's a couple of things you can do. You can get the data from the right places in the first place. So I think data on dual use goods. Most regulators will publish a dual use goods list that they think is high risk for their jurisdiction. So ensuring that you have that up to date. There are data providers that provide this to you at a global level as well. So I think that having that first of all is really, really important. I also think there's ensuring that you understand the normal activity and the actual nature of the business relationship you have with your customer. So KYC data, KYB data, for example. It's important to get that into the context of the transaction or the deal and don't leave it in isolation. And that's the whole power of having a single platform. I'll keep saying it because it's what we're very, very proud that we've done, but bringing all of this data into a single place is really important. But then also just utilizing some of the technologies that I've already mentioned to really test whether the understanding and the nature of the relationship is consistent with what the customer is ultimately saying it is. So a really a good example of that is if I'm buying MacBooks and they're being shipped and the shipping route is going from, I don't know, make a mistake with countries, let's say Australia to Norway. That's a bit of a random route, but let's just say that exists. Well, actually, if that goes somewhere else that's through a port that's completely outside of that normal route, and you can get this data as well, then again, that's a risk flag. So that may test actually, well, yes, we know this is a dual use good, so therefore we know we have to go through enhanced due diligence anyway, because that's what the regulator would expect, and that's what we would have usually as a process from a policy point of view. Then what data can we get in place to support us? So I would always say, get your internal data structured, utilize experts where there are big data companies this world has, right, and our industry has. So integrate to the right people, but then ensure that you have all of the information in a single place. There is no point having, amazing sanctions data if the person and the analyst that's reviewing it can't see all of the other stuff that you have internally over here. It's just a real shame, right? It'll increase the risk. So they would be the focus areas.
Yeah. Now we also have to consider outstanding challenges you have addressed with technology, both Complete Data, Eastnets, and other vendors. Lots of challenges, but there are still some outstanding. Like I could think of data sharing. As you pull a lot of data from internal systems of the banks as well as external sources into your compliance or financial crime technology, which are the data sources that are still not available for your technology, well, on the Complete Data side or Eastnet side, to basically done more, to deliver more value to the lenders, the banks or the non-bank lenders? Are there data sources that have been built but not available yet, or not sufficiently shareable for regulatory reasons or technical reasons, and that you would like to tap into?
I think I'll start if it's okay. So I think just two quick ones from me. So I think it depends on the jurisdiction, right? Yep. So there's certain countries that have really, really tight data security. Well, it's not that other countries don't have tight data security and sharing, but some countries we know are just really, really, overly, they won't allow data from, anywhere outside of their jurisdiction. So it may be because of that, right? That's a restriction. But I think, if you've got a holistic platform that can get all of the data feeds in, if you own the data feed or you can procure the data feed, then there should be no restrictions. I think the key one is it goes back to the data sharing and the bank sharing and the regulator sharing. There'll be, within your own national community, there will be banks who ultimately have bad actors that are transacted through them. And if they are lucky enough to catch them, the sharing of who those bad actors is still really, really primitive. So I think that's data that you won't have largely. That again, the regulators and the banks working as communities, and there are associations in every country that can push this. I think that has to be a renewed focus, because you can have the best technology, the most wonderful process, the most intuitive user journey in the world, but unless you have the full picture, which includes what other banks are seeing. In the UK, there was the Hunter system that was wonderful for years from a fraud perspective. That allowed data sharing at a national level. It was really, really successful. I think we need something at more of a global and regional level here.
Yeah, one thing we found on the payment side, Andre, and obviously one of the steps here is the challenge for financial institutions to share any data, even with approved fintech partners, or even global companies. But you can solve that problem by going on-prem rather than SaaS. As a sort of second choice or last resort, because the power of going the cloud SaaS route, we will eventually get to more federated data, not today, not tomorrow, but later. But I think if you do that, actually relatively limited data sources, internal only, without, let's say, adverse media I mentioned before, or directory checks, or the standard list providers, etc., you can still actually achieve quite a bit. So without replacing a rules-based system on the payments transaction monitoring side, or a fuzzy matching logic check on the sanction side, putting in, KYC data, putting in alert adjudication decisions, putting in investigation outcomes, putting in SAR information, the actual wire transfer, or even a subset of those sort of 7 or 8 sources, you can really detect financial crime that's been missed and bring down false positives. We've seen many implementations where, for example, 20, 30, 40 clients were rated low and showed up in an ML-based screen versus a rule-based screen, and were re-rated high, and usually the transactions were SAR'd. And that's without taking any external data at all. So there's a lot you can do tactically without going external. If I may, I see in the Q&A a couple of questions around some typologies, one price checking, one related party. I think a quick comment as we're running out of time. I think from a related party perspective, obviously trying to detect accommodation finance, where parties are related and are pursuing non-commercial transactions based on illicit activity. We've seen a significant improvement in the ability to detect that. I think, context, the kind of relationship between counterparties, even where it's masked with multiple entities, as a result of the advances in, in transaction or post-transaction identification of counterparty risk, it has really helped address related party risk. I think from a price check perspective, it's more difficult. Certainly where there's a commodity, there's a level of ability to compare at a trade finance transaction level to an index as to, whether there's a level of, 15, 20, 25% tolerance or higher than that. It still tends to be more at the investigation level rather than automated, but we're getting there. I think for a non-commodity item, it's still very challenging, and I think it's also something that regulators are not particularly unified on in terms of should this even be considered, can this even be done. So I think price check is getting more doable, but still a challenge. You feel the same way, Sean?
I do, but I think my view of advanced technologies has been pretty clear through this entire webinar. So I think there's ways to do it. I think the adoption is potentially slow, and I think education is the big thing. The only things, I know we're truly at the end, well, getting very close to the end. I think the only thing that I think should potentially be a focus is, you've mentioned the investigation process a few times, Ben, when you've been talking through some of the learnings from your side. I think actually how intuitive that investigation process is also something that should be a real big focus, because again, you can have the data, you can have the sources, you can have the technology, but actually if it's really, really clunky for the analyst to get what they want from the right place at the right time, then that's ultimately going to hurt delays within the trade deal itself. So I think ensuring that you're investing in your process as well, and understanding exactly, where are the pain points, and ensuring that the workflow ultimately that you have is optimized to the maximum amount, is something again that we've really, really focused on within Safe Trade. Just make it intuitive, reduce the investigation time as much as we can. And that's outside of the advanced technology side. That's just, again, how does it look and feel for a user, which I think is really, really important.
Now, looking ahead, and as we're coming to the end of this session, and of course we could continue for 2 hours or even write a book about this market challenge. But looking ahead, we have now this financial crime compliance initiative at ITFA as part of the FinTech committee, and the goal is to identify what kind of collaborative area Eastnets, Complete Data, and the 30 other members who joined the initiative can work on. Is there an area where indeed more data sharing policies, techniques, or more registries, because more and more we see some regulators like Singapore going to registries for duplicate funding, for instance. What would be you're looking ahead really, what would be your message to industry stakeholders, could be regulators or associations like ITFA and ICC and others, to help you deliver more value again to your clients?
Yeah, I think critical for me is at the highest level being threat driven, not technology driven. I think it's got to be what are the key challenges as we've discussed today. How can we lean into those? How can we focus on those from an actual use case perspective, typology perspective? Where are the most critical concerns? And then applying solutions which may or may not be available. That being said, I think large language models from a processing identification perspective are going to be game changing. I think Gen AI, when you add in a kind of deeper creativity and predictive element with appropriate prompt engineering, will really make a difference as well. Not necessarily, as you said earlier, Andre, in sort of every case. There are certainly many cases that we've found in our experimentation where Gen AI doesn't work and may never work, but that tends to be outnumbered by cases where it's really game changing. So I think it's let's be driven by where collectively we're most concerned about financial crime, and then kind of apply our hybrid human expertise with AI to that problem, and certainly be led, not be led, but certainly kind of leverage in AI and LLMs as much as possible.
And you would expect regulators to be open to allow increased use of those advanced technologies, large language model, as you said, and Gen AI? Or do we have to chase them to allow for increased use of those technologies?
I think somewhere in the middle. I think obviously there are broader concerns around privacy and accuracy in the Gen AI space, which is why I kind of led with LLMs, which are obviously a subset of Gen AI, but more kind of language specific. I think there's also an increasing level of what we went through with machine learning models around explainability and the ability to actually, from a model oversight and governance perspective, have a clear line of sight between what goes into the model and the recommendation coming out of the model with automated explainability. I think we're making progress in the Gen AI and LLM space there around, as the kind of common terminology goes, it not being a black box. I think there'll always be, any new technology from a fin crime framework perspective, Andre, often comes with the need for a non-object from a regulator, which sometimes takes a year or two to progress. But I do think there's going to be increasing acceptance in the regulatory community for uses of these technologies in the right way, with the right level of explainability at a recommendation and decision-making level.
Yeah, thank you. Sean, any final comment on this as we are approaching the hour?
I think we're already past the hour. I think my last comment would be, I thoroughly enjoyed this discussion, so thank you. I think the other thing is, as an organization or an association, I think we have a huge role to play, right? At the ITFA, I think this work stream will be really important. To share best practice, share the challenges, but then also collectively put pressure on the regulators to get tougher from an enforcement action perspective. So I think the ITFA itself and this work stream have a really, really huge role to play to get us to a position that in 12, 18, 24 months time, when we have webinars like this, we're more focused on maybe what we could be looking at rather than fixing what we have today, if that makes sense.
Yep, definitely. And that's definitely what we're going to continue working on as part of the Financial Crime Compliance Committee. Indeed, we have been busy for an hour now because we started a bit late. So thanks to both of you, Ben and Sean, for sharing your expertise and insight. Was very educational for me, for sure, as I'm discovering this complex area. And delighted to support indeed further sessions and work. This remains a top priority, I think, for everyone, corporate clients, banks, tech providers like yourself, regulators. So no one will deny about the lack of interest from the market in this area. Thanks again for joining the stage today, and to Eastnets for sponsoring this session. Thanks to the ITFA Secretariat also for hosting it and organizing it. And of course, to our audience, we had more than 100 people joining us. I saw a question here around the recording. We're going to post the recording indeed on the ITFA member area around next week. So don't hesitate to visit that to replay the session or to share the session as well with your own audience. Thanks again. Have a great day, Ben and Sean. And unless you have some final word, I wish you a nice end of the week.
Thank you.
Thanks,
Thank you.
Andre. Appreciate you hosting.
Bye-bye.
Thanks.